Pleasure, you could join me. It is important that we begin business from Washington, D.C., and government is expected to finalize negotiations with all its interested parties in the International Monetary Fund Support Program in the coming weeks. Now, this should help Ghana secure an IMF approval not later than May this year. And my colleague George Yafe joins us via Zoom from Washington, D.C., where he's been attending this annual meeting. George, grateful you could join me on Zoom. Quickly bring us up to speed on latest happening in Washington, D.C.
Well, Pious, what is happening right now is that the IMF is going to launch its flagship Global Economic Outlook Report. Now, this is targeting all its member countries in terms of what will be the growth outlook and also what are the challenges to their respective economies. Now, for many people in Ghana, we'll be looking forward to see what the fund will say about Ghana in terms of the growth outlook for the country. If you could cast your mind back just last week, the World Bank, in its Africa Pulse report, actually projected a 1.8% growth for Ghana. Now, that is far lower than government's 2.8 that it was projecting to realize by the end of this year. Now, in times in the past, there have been instances where the IMF will project a different growth target, and also the World Bank will also have a different growth target for Ghana. We want to see whether that could be the same this year when it comes to the growth outlook for the country. Are they also going to be that optimistic for Ghana when it comes to economic growth for this year, or are they also going to project that growth will slow compared to what government is hoping to realize in its 2023 budget? So that is the major agenda, and that is for many people who will be looking at what is in for Ghana. And some will talk about the Paris Club meeting. But let me get back to you, Paris.
Us through the latest formation, which has to do with the Partial Creditors Committee, which has been formed.
Yeah, you're right. Remember earlier we were talking about the creditors, the Paris Club reaching a decision today. It appears that will not happen today. What we are gathering is that there will be a formation of a Partial Creditor Committee to begin formal engagement with Ghana. And that is when we'll have a fair idea whether they are going to express officially that they are committed to financing Ghana's program. And that meeting should happen this afternoon, and we'll get fine details. So it is going to be a partial creditor committee to begin formal engagement with Ghana, and the finance minister will lead Ghana's team in terms of engaging the Paris Club to see what will be the way forward. Are they going to commit themselves to financing Ghana's program and possibly restructuring our debt in terms of participation? Or they're going to look at a situation where they'll say, well, no, you're not going to do it.
I'm struggling to find what this will mean for Ghana's, debt restructuring, and if possible, its cancellation.
Well, Pious, behind the scenes, if you engage some of the members of the Paris Club, what you get is that they are committed to assisting Ghana. The challenge has to do whether China is going to come on board or not. That will also be a very interesting development that we have to watch. It appears that China might not join the Paris Club. They want to have a separate arrangement. They have said in principle that they are committed to participating in Ghana's financing program. So if the partial committee is anything to go by, that again might signal that the Paris Club is committed to participating in Ghana's financing program. And they'll be looking at somewhere around over $5.5 billion. So that might help in terms of us going to the IMF board to get our program approved.
I'm pretty sure you've been engaged in the government delegation, and what have you been getting? What's their mood like?
Well, you get the understanding that Pious, now everything is in the hands of the bilateral creditors and the IMF board, because the argument is that Pious, they believe that they have done what they are supposed to do in terms of those preconditions that they are supposed to undertake. You could talk about the zero financing, which is being worked out. You could also talk about the utility tariffs that have been also reviewed as well, the revenue measures that have been done. So they believe that on their part, they have shown much commitment to this program. So now it is left for the bilateral creditors and also the IMF to take a decision on Ghana's program. And they believe that having done all these things and just looking forward to this partial creditor committee that will be formed today and begin engagement with Ghana, they are hopeful that they should be able to get this program approved in the second quarter of this year. And again, Pious, holding all other factors constant, there's a likelihood that we could get the program in May this year.
We'll certainly keep our fingers crossed to that. But quickly before you go, we understand there's going to be a launch of an economic outlook report. Bring us up to speed on that as well.
And that's what I explained to you earlier, and as we speak right now, that launch is going on, and we'll be looking forward to see what the IMF is going to say about Ghana, the challenges, the prospects, and whether indeed we will turn the corner very soon, or there are still serious challenges ahead, Pious.
We are indeed grateful, George. You are faithful updating us with the very latest from Washington, D.C. in relation to the IMF World Bank Springs meeting. Keep an eye on that for us, and we shall certainly come to you as and when development unfolds in that part of the country. It is important that we also engage an economist on this matter, and joining us via Zoom is Professor Godfrey Bobkin for his take on this matter as well. Grateful you could join me, Prof. Bobkin. Now, we are learning that our external creditors, either ways, are, kind of in agreement with government to come to, basically clear the way for us to secure a deal from the IMF. Do you think that is achievable?
Well, I think in principle, both Paris Club creditors and non-Paris Club creditors have indicated their willingness to help the country. The question is the strategy, the channel through which we have to come to that realization. You will see how the global economic fragmentation is playing out in here in terms of the West, and then also in terms of China, Russia on a different block, right? So you will see that in as much as the West wants to help us, there is also this considerable scope that we doing so must be contingent on China forgiving Ghana and a number of other African countries of their debt. Now, why is that so important? You will notice that from 1844 through the partition of Africa, you see the role of trade and debt in the colonization of Africa and our resources at play. In the last 2.5 decades, you also get a sense that China, through trade, similar approach, more or less, through trade and debt diplomacy, is winning the heart of Africa. So the idea is that with Russia-Ukraine conflicts, the new geopolitics and geoeconomic fragmentation, you get a sense that the West now wants their former girlfriend back. To do so, there has to be the need to free Africa, including Ghana, from its debt bondage to China and those countries, right? Because the idea is that bondage and bonds are from the same family word, more or less. Okay, so just as a slave is a servant to the lender or to the master, so is a borrower a servant to the lender. So you see how all these things are playing out now. So, and then also Ghana hasn't helped itself. If Ghana says that we've done our part in terms of the prior actions, no, we have not. Look, if you look at the 2023 budget alone, the fiscal gap is over $5 billion. That is without adjusting for the fiscal savings from the domestic debt exchange. Now, if the IMF approves the program with this gap, it will not work. That is all that the IMF is saying, is that with the funding gap, coupled with the fact that Ghana has lost market access from the Eurobond and then also from the domestic market, approving the program without assurance from our bilateral and multilateral partners that will commit to funding the gap, the program can only achieve limited effectiveness. How can the gap be closed? The gap can be closed in one or two ways, either through significant debt relief or fresh funding. That is where we are now. And I'm not too sure. And remember that when it comes to the Asians, their approach to debt forgiveness is different from the way the West sees it. Remember when we signed up for HIPIC, Japan reacted because that is inconsistent with their philosophy. And typically when it comes to debt forgiveness, the way China looks at it is different. So probably the same terms that they want China to come to the table, just as the Paris Club creditors, may not work for us. And we need to look at it from that angle. The other bit that you also need to look at is actually the composition of our external debt and why we are majoring on the minor. If you look at the composition, the majority of our debt are in the form of euro bonds, external commercial, more than 13 billion. How much does China owe, do we owe China?
1.9 billion, yeah. 1.9 billion.
Yes. That won't break our back with a considerable wasteful expenditure cuts. And again, I'll go back to the joint committee that was set up in the course of the domestic debt exchange with individual bondholders and staff from Ministry of Finance. They were able to document that in a single year, the expenditure cuts, wasteful expenditure cuts, together with the revenue, blocking revenue leakages, we are looking at something in excess of 80 billion cedis. Actually, that is far more than how much we owe China. And actually, that will be far more than how much we actually owe some other Paris Club creditors. So in as much as we want to look at external partners coming to our aid, we should be looking at what level of wasteful expenditure cut can we do. Now, if you look at why the IMF is concerned, even though we have approved, Parliament has approved those revenue bills, the revenue bills, assuming they worked to their optimal level, the deficit in the 2023 budget alone is over 5 billion. Next year is going to be over 5 billion. 2026, in the same way, 2025. Now, if you look at energy sector alone, the energy sector indebtedness alone in the next 3 years is over 70 billion. So really, you will see that even in addition to considerable debt relief from our external bilateral, external commercial, assuming Eurobond restructuring works well to the extent that we arrive at MPV negative, which will be to our advantage, rather than MPV neutral, which is a zero-sum game. Right. There will still be the need for us to look at expenditure in combination with revenue enhancement in a way that does not undermine private sector competitiveness whilst we work towards our fiscal consolidation agenda.
Great. So I want to pick your thoughts on this because there's been calls for government to be strategic, when it appears before creditors. And one of such strategy was that government needs to, update itself with data. I don't know where you stand on that, but looking at how the timelines keep changing, what are we likely to see and what could be the impact?
I think that it's not so much of how the timeline has been changing. It's more about government communication. Why am I saying so? When we're doing the domestic debt exchange, because they more or less through coercion, we were trying to create the impression that the banks and financial institutions and individual bondholders needed to sign up quickly, otherwise the economy was collapsing, so that we could get the program by the end of January. It was a strategy to get bondholders to surrender their old bonds for the new ones at considerably lower rates and all of that, because that had been achieved. Then again, when it came to passage of the revenue bills, we packaged it as though we needed to do that and that was what we needed to do. No. And as you can see, the critical thing now is, and it has been there, is the assurance from bilateral and multilateral. Certainly, if you look at the way things are unfolding, our expectation had been that this week is a critical week for Ghana, because our bilateral, multilateral are all gathering in Washington, and therefore we will see some level of clarity in terms of the way forward. But certainly this month can't be possible for us to have a program, and therefore we should be looking at maybe middle of May or towards the end of May and all of that, because it's not going to be easy. And remember that it's simply not just helping Ghana and other African countries. The new Scrabble for Africa, every powerful nation wants a portion of Africa, okay? And all these things are at play, and it's influencing how the discussions are going in terms of the geo-economic fragmentation and geo-global politics playing out between the West and China, Russia, and the rest of them.
We are grateful, Professor Godfrey Bobkin, for your time on the subject matter. We shall come to you as and when we need some clarification. Grateful you could join us on the marketplace. A while longer on the IMF, but in Ghana, capital market players are worried about the kind of returns it will be making as ongoing negotiations with the International Monetary Fund lingers. Now, according to the president of the Ghana Securities Industry Association, Winston Nelson Jr., the industry is concerned about the IMF deal because it presents another layer of confidence which could boost activities on the market positively. Now, he tells Joy Business that the continuous postponement of the deadline for the agreement with the fund brings some uncertainty onto the capital market.
The key concern is, when is the market going to fully reopen? You know, we had a market that was trading at a certain volume pre this program, and it hasn't gotten there yet. The volumes we trade in a day are less than half what we used to trade the same time a year ago. There has been definitely haircuts on the coupons that people are getting. So there's a lot of uncertainty. Currently, I think our biggest concern is, how is the market going to open and in what form? When is the IMF program going to end? When are we going to complete it? Because it becomes a key line item for us to close, for us to see the way forward. So these are some of the key things that concerns our members. And remember that once volumes are down, businesses are kind of suffering in terms of their revenues. Definitely their revenues would also be down. But you know, in this environment, expenses and costs have actually been rising. So most of the people will be living on, will be having higher costs than their revenues. It is therefore important that the markets open quickly so that we will be able to start at least breaking even, or else we'll be booking losses for a longer period of time.
You engage the managers of the economy or the leaders of this market, what signal do you get?
Well, we were under the impression the IMF program will be completed shortly. But we have been under that impression for a while. As you know, you are also in the media, so you know, like I also know, there's no clear date. It becomes a target for every month, and we keep going forward. The target keeps moving forward. So the big question is, okay, when are we going to get this thing done? At least we know the domestic is done. When will the external be done? For us to be able to conclude with the IMF. For us to now come back and now start dealing with how we rebuild again.
A while longer in the financial space, and the Bank of Ghana has once again justified its financing of the budget post-COVID-19, saying failure to do so would have spelled doom for the economy. Now, speaking at the University of Ghana's 75th anniversary public lecture on Ghana's economic, the need for paradigm-shaped, Director of Research at the Bank of Ghana, Dr. Philip Abredu-Otu, said the Bank of Ghana had no choice but to save the economy from collapse.
From 2015, when we were on the first ECF program from the IMF, we've had strict zero financing memorandum of understanding between the central bank and the Ministry of Finance, and that has been respected from 2015 up until 2020 when COVID struck. And then we had to change the modus operandi. We had to provide some financing to government to deal with the COVID. And then this latest big shock, which Dr. Graham says is the biggest of all shocks, which also came in last year associated with debt. And there was some financing associated with that. But again, why the central bank did what it did at the time. Dr. Graham characterizes this as the biggest shock. And from the central bank's point of view, we realized we needed an economy to protect. So there were choices that had to be made. Should we allow the economy to collapse, or we should stick strictly to issues of fiscal dominance? And then who picks up the pieces after the economy has collapsed? But that financing that we did in 2022 went mainly to deal with investors, both domestic investors whose bonds had matured, and government needed to pay these bonds, and for which government had no resources. We had to step in as the lender of last resort and allow the domestic investors to get their returns. All the amount, 100% of that amount, was due to domestic bonds that had matured, for which we had to step in to save these domestic investors. And that is where the fiscal dominance issue came in. So yes, it came in, but we did that to save domestic investors.
Let's now do something on energy because Ghana is ranked first in sub-Saharan Africa with the largest electricity access rate. Now, this according to the World Bank's April 2023 Africa Pulse report. Now, the nation recorded about 81% access to electricity rate in 2021. There is more in this report.
Ghana beats African powerhouses such as South Africa, Kenya, and Nigeria. In 2015, the country's access to electricity in Africa stood at about 75%. That still placed it number one on the continent. So between 2015 and 2021, the country added a little over 5% power to the electricity access rate. The World Bank's African Pulse report pointed out that the COVID-19 pandemic has had a sharp adverse effect on access to electricity, adding the pandemic eroded gains made in the preceding 5 years. In several countries, it said the number of people without access to electricity grew rapidly between 2020 and 2021, despite progress made prior to the pandemic. However, in Ghana, Kenya, Rwanda, Senegal, and Cote d'Ivoire, the numbers were stable or reduced. Meanwhile, Cote d'Ivoire and Kenya were ranked second and third respectively in sub-Saharan Africa with the biggest electricity access rate.
All right, so let's move straight to Zoom and speak to energy strategist Dr. Yusuf Suleiman to share his perspective with us on this great chief. Grateful you could join us, Professor Dr. Yusuf Suleiman, for your time on the marketplace. This certainly is great news to Ghana and, of course, the sub-region, you would say.
Yeah, good afternoon to you, Pious, and thank you for having me. Yeah, indeed, that is refreshing to hear, especially if you look at the global context where we are coming from. I mean, chalking this milestone is something that we should commend ourselves. We only need to make sure that whatever help us to, come to this far, I mean, we should be able to maintain that or sustain that. What's the global perspective here that I think Ghana is doing well? I mean, if you look at globally, this particular thing sits into what we call the SDG 7, that is Sustainable Development Goal 7, where it is stipulated that we need to have access to electricity and clean energy, clean sources of energy. Now, globally, as we speak now, we still have about 0.8 billion, specifically 770 million, having zero access to electricity at all as we speak now. So, and that's a global figure. And out of this figure, about 85% is coming from African continent. And so if we look at the fact that from 2010 up to now, that there has been some sustained growth in this particular margin globally. And so if you look, but the growth hasn't been that massive. In fact, it's annual basis is less than 1% on annual basis. So yes, for Ghana to still maintain this important place in Africa, in the sub-Saharan Africa, I think is something we have to commend ourselves. And I think some policies might have worked to our favor, because there are two things that actually will help, in every nation to succeed in terms of power penetration, access to finance, and then prudent policies. And I think probably Ghana has done well in these areas in the years. Yeah.
Good to know, but there are some who argue that what really is the essence of this, feat that we're talking about, if indeed access is free, but its affordability is questionable.
Yes, that's a fact, and that sits into what I always call energy security triangle. Yes, affordability is key, and in fact, that is also key to penetration. If energy is available and it's not affordable, it will still impact the penetration rate. So in this triangle that I talked about, energy has to be accessible, affordable, and then dependable. If these three things meet, and I think a country will then have complete energy security. But as we speak now, I think Ghana is not all that competitive in terms of per kilowatt hour the end user pays. Albeit, we've still been able to achieve this penetration. And it also means that if we're able to do our homework well and improve in all the value streams, the three key value stream areas where we can improve, I think we can even do better in terms of our penetration rate.
In your own words, how would you say we need to sustain these feats? What do you think we have to do urgently to sustain these feats going forward?
Yeah, so like I mentioned, if you look at what gave Ghana strategic advantage over our counterparts or our counterpart within the continent or within the sub-region, will be two things. I think prudent policies and, like I mentioned, and some kind of public finances. Finances have been very difficult, especially after COVID. And so we need to move along. Those policies that we champion that have helped us, we need to stay the course on those policies. Number one, let's come to the generations side. I think what I call Dumso has been a blessing in disguise, because after Dumso, what has happened, Ghana has robustly improved within our generation mix. And I think that is one of the key drivers that helped Ghana to be in this, to chop this milestone.
All right. Thank you very much.
We have been able to liberalize part of our value stream where we introduced IPPs. We need to sustain this, and we need to make them profitable as
all right.
Whole.
Thank you very much. Your point is well made. Dr. Yusuf Suleiman, your point is well made. Grateful you could join me, Dr. Suleiman, for your time here on The Marketplace. Pleasure serving you. I am Pious Kojo Backah. You can always get business stories when you log on to myjoyonline.com/business. We leave you with some currency updates.